I have a chart here for Acadia Pharmaceuticals, and you see I have a lot of things. We got Wells Fargo, some utilities, some Whole Foods. We're going to go through those charts, but it's very important for you to understand what exactly you guys are looking at here. Now, this is a software I use every single day. It's a VantagePoint Intermarket analysis software, but what I want to show you is something quite interesting here. Now, Acadia Pharmaceuticals, I can go ahead and type this into the market tree here, and we can bring this up. But how this works is we're utilizing a type of technology. It's actually a type of artificial intelligence called neural networks. Now, neural networks have an unbelievable ability to scan a ridiculous amount of information. Actually, there's 2 patents on this software, on this approach and technology. One of those patents is utilizing this type of artificial intelligence to scan, literally thousands of markets and weed out those important market relationships. Now, we can actually go in and view what is referred to as the intermarket. So before any forecast or any information is plotted here for Acadia Pharmaceuticals, this software is analyzing the 25 to 30 most closely related markets that are known to affect and drive, in this case, Acadia Pharmaceuticals. Now, a lot of these are those broader market relationships where are extremely important for your trading. If you look here, we do have the dollar index. We have the Japanese yen, crude oil, natural gas. We also have other indices like the mini Russell, some ETFs, the Qs, the SPYs, the biotechnology index, as well as some healthcare, financial, technology service stocks. So, the 2 patents on this software, one of which is identifying all of those important market relationships and incorporating that into our analysis here. But the other one is then weighing each one of those relationships. And this is so important, guys, because just like we showed you with the DAX and the S&P, a lot of these relationships are positive correlations. Some of them are negative correlations. But where people really get tripped up, in my view, is a lot of these markets, some of them lead. Some of them are leading relationships. Some of them are lagging relationships. And it's so important to analyze all of this information. And what this technology of neural networks is able to do is essentially learn these relationships over time and incorporate that into a forecast, essentially a singular output, so that you can make better trading decisions in the market. So that's really the secret sauce behind the software. So when we're looking at stock XYZ, when we're looking at Apple, Acadia, whatever we're looking at, all of this data is going in, and then it's being really weighted and producing essentially a forecast so that we can make better trading decisions. And it's extremely accurate over an extremely long period of time, as well as across a very wide assortment of markets here. You see I have the U.S. stock sectors here. We have basic materials, all these mining companies, all these different stocks. But it's also applicable for the Forex markets. We have the majors and the crosspairs over 25 or 26 currency markets, as well as the futures, about 70 or so futures markets like the S&P 500, crude oil, the grains markets, gold, all that. So very applicable regardless of the markets that you're trading. Now, I want to go ahead and explain everything that we see on the chart here, because once those neural networks have really performed all that analysis, it is then producing the forecast for us to then go ahead and make trading decisions on. Now, here we have Acadia Pharmaceuticals, and what you're going to notice here is that there is a black line and also a blue line on the screen. So what's important to understand, though, is that black line that you see here, let me go ahead and bring up my cursor here. This black line that you see on the screen, that is a regular simple moving average. So all that does is it takes the last 10-day close prices, averages them together, and then plots that line moving forward. Now, that's what's referred to as a lagging indicator. And the reason is, one, well, it only looks at past prices, and it's only looking at the close prices, in this case of Acadia Pharmaceuticals. So a lot of people are basing their trading decisions off these types of indicators, and honestly really doing so at their peril. Now, the blue line that you see here, though, that is VantagePoint's proprietary predicted moving average. And what that value is doing is plotting the moving average moving forward. It's weighing all of those relationships, and then to plot the value of that line, again, it's weighing those 25 to 30 most closely related markets before it's able to plot that value. So how we can utilize this tool is understanding that, whenever we have a situation where our blue line crosses above our black line, like we have here at the beginning of the chart, that represents to us a trend change. And so that's very important for traders to understand that, by using these tools that, are weighing these relationships and then actually forecasting the values for you, it's going to give you an early step. It's going to give you some lead time into getting into these markets so that not only your timing will be better, but you'll much more accurately be able to determine what direction should I be trading the market at this time. I know a lot of traders, they get into markets, and what happens is if you get into a market too late, it can be very detrimental to your trading. I mean, it can actually turn a trade where you should have been a winner into a loser very, very quickly. Now, does everyone at least understand that the difference between that blue line there and the black line? Let me know, and we'll go ahead and move forward here because I want to explain everything on the chart as well as this indicator here at the bottom. Now, before we go ahead and touch on this indicator at the bottom, because we want to use these tools together collectively, is really an overall forecast that we want to weigh in. But what we can do is, again, utilize these relationships to understand, what direction do I want to be trading the market, and we can see how effective this is. I mean, we had a 24-day rally in Acadia Pharmaceutical, about a 60% move to the upside, $12 per share, but once that blue line crosses below the black line, that's a direction change, saying, okay, let me go ahead and look to go ahead and step aside from this given market here, and we see once we get another crossover to the upside, again saying, okay, it's all clear, look to go ahead and get long the market. Another really nice rally here. Now, that's just the predicted moving average. Now, that's going to help you with your direction, and that's vitally important. But what's going to help you get even more confirmation is this other indicator at the very bottom of the screen. So let me go ahead and explain this, and then we're going to look at getting more into that confirming markets, how we use this technology on looking at other markets and really helping us hone in on where do we want to be paying our attention, where do we want to be trading, this week or this month, given whatever your trading style is. Now, let's go ahead and focus here on the bottom of the chart here because it's very important for me to explain here. Now, this other indicator that you see at the bottom here, this is called the predicted neural index. Now, this is an extremely accurate indicator, and it's looking out 2 trading days ahead. Now, I should obviously mention that what we are looking at here is daily bars and candles here. Software works off of end-of-day data, weighs all of those intermarket relationships, whether they're coming from Asia or Europe or related markets, analyzes those relationships, and then plots these values forward for you. Now, how this indicator works, though, is it can either be a 1 or a 0. So it's either going to be right or wrong. And what it's doing is forecasting, again, short-term strength over the next couple of trading days. So how we can use this, and how I like to think of it, which is extremely helpful, is you can utilize this as essentially a throttle. Shorter term traders can recognize the direction, recognize, hey, look, I want to go ahead and be bullish over the next couple of days, and then make their trading decisions accordingly. But what's very important is understanding, how do these tools work together, and you're going to see how effective this is. Now, notice that our blue line crosses above our black line here, and after this trading day here, our neural index, it does go down to a 0, signaling some short-term weakness in the market. Now, you get a pullback, of course, the market, moving from about $23 a share all the way down below 20 gives traders a lot of anxiety. A lot of traders then wonder, hey, what should I be doing in this market? I've gotten in, I got a good entry, but now that's completely turning around. Well, when we utilize these predicted moving averages, we again get that clear confirmation that, look, as long as that blue line remains above the black line, go ahead and maintain that position. The direction is still to the upside. And what you'll notice is that when you get separation between these values, essentially when the blue line is quite a good distance away from the regular moving average, it's signaling that there's a lot more strength in that trend. So you definitely want to pay attention to, hey, am I getting a nice clear separation here between the prediction and the actual, or are things very, very narrow? Are they pinching together? And what you're going to notice is, when you get this blue line above the black line and your neural index up at a 1, you get these very nice rallies higher in the market. So you can see here that over just a short period of time, actually, until the neural index goes down to a 0 again, in a very short period of time here, you've got a really nice rally here. Let me go ahead and bring up the profit calculator here. But in about 7 trading days, the market's moved up about 25%. Your neural index moves back down to a 0. and we get a little sideways action in the market, and we also see that the blue line and the black line are predicted and our actual are pinching closer and closer together. Now, additionally, you're going to see this period of time here. The overall direction is still up, but you see your neural index, that 2-day forecast, saying, look, over the next 48 hours, so from this day, you knew, look, over the next 48 hours here, going to have some short-term weakness. Over the next 48 hours here, going to have some short-term weakness, and we see the market is moving sideways. We also see the predicted moving averages are pinching very close together, signaling that this trend may in fact be weakening. But then we get a nice clear confirmation that, look, direction is now to the downside, neural index confirming that move to the downside, and you definitely want to go ahead and be short over this period of time because we're getting a pretty aggressive decline in the market. And so this is what I mean by using this as a throttle and why this is so helpful, because we can see clearly that there's absolutely no reason to be long this market for Acadia Pharmaceutical, but your 2-day forecast, so your short-term tool, is very, very weak over this time period. Said, go ahead, step aside from the market, wait until everything cleans up and you can go ahead and get long again. Or, a lot of traders get a little hesitant in just taking short positions in the market, but when you have a tool that's consistently accurate, it really does not matter if the market's moving up or the market's moving down. There's opportunity there, and you can go ahead and place your bets, place your trades essentially in line with what the software is telling you to do over that next couple of days. So again, we get a crossover to the upside, neural index strongly up at a 1, and then you'll notice again here, some sideways action in the market. Our neural index had flipped down to a 0 here, so we're not aggressively moving higher, getting a little pinch between our blue line and our black line, but no crossover. And so, this is where so many traders get tripped up and why they're not making as much money as they should, because they're not holding on to markets when they should be. They're either getting out of the market far too early, getting some short-term weakness in the market, and they're tightening up stops too much or getting too anxious about the trade, and then right before the market takes off and has a nice rally higher, they've gone ahead and missed the whole thing. So this is what's so critical about your trading, is really being able to capture the entirety of the move and have the confidence to hold your position during times of volatility. Now we see the most recent forecast here, crossover to the downside, and Acadia going lower. Very, very weak signal from the neural index, signaling, look, over that period of time, you don't want to be long the market again. So, this is the benefit of utilizing a tool that, regardless of direction, is consistently accurate to the upside, to the downside, and across really all markets. We forecast for so many different markets with this technology so that you can apply the same approach and be very, very selective with the trades that you inevitably decide to get involved in and put your capital at risk in. So, I definitely want to make sure that the odds are in my favor before I go ahead and risk that, capital that I've worked very, very hard over my short career so far for. But now I want to dig into something a little bit bigger here. Actually, before I go ahead and move on, we're going to look at some ETFs, show you how you can combine these things to really get some confirmation. But I want to go ahead and show you how this tool really works moving forward through time, and how it can help you make trading decisions, and how it's going to help you adapt to changing market conditions. So we went ahead and we went through that really brief description of our crossover and our neural index. If you understand essentially what I explained with those tools as far as identifying your direction and then short-term strength or weakness, go ahead, let me know, type yes, ask any questions that you have about that. But how I'm going to show you how easy it is to interpret the forecast, and how moving forward, as you're go ahead and making these trading decisions moving forward, how you're going to be able to adapt to those trading conditions. I see a 10-4 from Todd. We'll go ahead and move on. I'm assuming you guys all get this, but we're going to dig through a bunch of different charts here. So now, as I explained here, blue line crosses below the black line, and we see, okay, neural index down at a 0. So very, very clearly, let me know, up or down, which way are we going to be trading this market, guys? To the upside, to the downside, type it in there. And what we're going to do is we're going to roll this forward. So again, you can see how this is going to really appear for you every single day as you're making these trading decisions. So I can go ahead and click through each day here, and we'll see what we get. Now, nice move lower. We got a really cheap stock here, but nice move forward. I see down, 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 downside. Okay, so moving this forward, A lot of separation between our blue line and our black line. Neural index there down at a 0, still headed down, everything to the downside, still moving down, still moving down, still moving down. Let's go ahead and roll this forward. Now, we see we get our neural index up at a 1. So we're signaling, okay, some short-term strength in the market, but overall the direction, right, still to the downside. So what is that telling us? Okay, well, we can go ahead and take, some of our position off, maybe try to get a better price, but certainly only trading the market to the downside because our predicted moving average showing a lot of separation there between the blue and the black line. We see a little bit of short-term strength, and this is what's so important, guys, is so many people, they just don't have the patience. Over this period of time here, they see a really big candle, really big green candle there in the market, and they say, oh my goodness, I need to go ahead and step aside from this market. But you see that the overall direction over the next couple days, still to the downside. Neural index clicks down to a 0, and market looking to go lower. Let's see, we'll roll this forward and see where things go. Got to take off my clicker here. Go ahead and move those. Hold on one second here, guys. There we go. Sorry about that. All right, so moving forward, again, market moving lower. Neural index comes back up to a 1, but still lower. Blue line below the black line, and here we go. All right, so over, let's see, how many trading days here? We've got our blue line remaining below the black line. Markets moved down around 20%, or $1.28 per share. So, I mean, how many shares could you buy of a $6 stock or so? I'd imagine probably quite a bit. But a $6 stock, markets moved down about $1.28. Definitely a nice move. But now what should we be doing in the market? Where is this market heading now based off of the forecast that we see here on the chart? Remember, this is leading the market. So this is telling us what's going to happen over the next couple days, direction as well as short-term strength or weakness. And I see, all right, you guys are definitely getting this. To the upside, to the upside. Very, very clear, guys. And that's what's so important. A lot of people are using so many different indicators, right? I don't know how many traders I've talked to. They've got 6, 7 different indicators on their chart, and they're extremely redundant. You've got so many indicators either doing the same things or showing conflict that make things quite confusing. But when you have a tool that's analyzing all of these market relationships in the background for you, utilizing a really modern technology, which, you look at what people are using in the markets, it's some really basic averaging and some standard deviations and things like that. But when you're using a tool that's consistently forecasting accurately, it's been tested over, this software product's actually been refined over the past 25 years. The company, Market Technology's been around for 37 years. It's definitely a different approach and definitely a better approach for you. But let's go ahead and roll this forward. We'll see how things are going. Cross over the upside, a lot of strength in the neural index, and you see, look, over the next couple days, market moving higher, market moving higher. Move to the upside. We'll go ahead and click this forward, see where we're at. Really nice rally here in the market. So certainly don't want to be short over much of this period here where, look how clear this forecast is, saying you do not want to be short the market. And you see this market going from about $5 a share to about $5.80 in a very short period of time. But let's see, direction's still up, but something's changed here. Now look at this. Now click this forward one more day. Now, this is what's so helpful about the software is, how I like to use this neural index is I like to form that directional bias. Utilize the predicted moving average to understand, hey, what direction do I want to be trading the market? But then utilize this neural index as a throttle, knowing, hey, when do I want to be heavier on my position? And when do I want to scale out? When do I want to be a little bit lighter on the position? Well, you see how much lead time you get here with the neural index. You've got 3 out of the last 4 days here saying, look, over the next couple days, expect some weakness in this market. So you can go ahead, take some profits up here at 560, 570, take some of your position off until you get that clear indication that, look, now we've got a crossover to the downside, neural index solidly down at a 0, and what should we be doing now in the market? Go ahead, let me know. Should we be going long, going short, holding our position? What should we be doing? And we'll go ahead and roll this forward. And this is why this is so critical, and you're going to see this in the next chart that we go over. This is why it's so critical to have tools that are consistent and consistently good at forecasting that short-term strength or weakness in the market. Because if you don't have tools that are leading the market, if you have tools that are essentially lagging behind the market, it can absolutely kill you as a trader. Of course, if you're on the right side of the market, it can really be the thing that goes ahead and makes your month, makes your year as a trader. But see, we definitely do not want to be long the market. The forecast is very clearly saying, look, go ahead and be short Infinity Pharmaceuticals. You have about 72% move lower. So again, how many shares, go ahead and type, I know we got a lot of different traders. How many shares could you go ahead and buy or sell of a $5 stock like Infinity Pharmaceuticals here? If you went ahead and had 1,000 shares times $3.62 just over the last 7 trading days, you've made about $3,600. That's maybe a margin account with around $7 grand in it or so. Definitely able to go ahead and take these sorts of positions and really, really increase really the equity on your account. Now, I wanted to show this chart because I really wanted to dig into utilizing these confirming markets, but when you're utilizing a tool like VantagePoint, along with this approach of understanding what markets should I be looking at to get confirmation, it makes things a heck of a lot easier, and it's going to help you understand how you should be positioned in a given trade. So, hey, should I be short the financials? Should I be long the utilities? Should I be trading tech stocks? So you can really hone in on the individual market that you want to trade. And when you've honed in on that individual market, and then you have a tool that's, again, weighing all of those intermarket relationships, plotting these values ahead of time for you, it makes it much easier to make your trading decisions, and also helps you have a heck of a lot more confidence so that you can hold on to the trade. And that's so critical, is holding on during times of volatility. And I talk to so many guys, they want to be day traders, and it's like, okay, well, I get that you may want to day trade, and you can certainly know where you want to be a day trader with the software, but if the market's still going up, I want to be long the market. I want to be holding my position, and I want to capture that entire move. And that's what really can make a huge difference with your overall trading, is capturing these really nice big swings in the market. So here we have Infinity Pharmaceuticals, and I'm going to pop back here and we're going to look at some ETFs, because you got to understand that just looking at the ETF markets can really help us get confirmation for trades, whether it's a pharmaceutical company, whether it's financials. We're going to go through some things here. But when you're utilizing a technology like this, it can go a long way into very clearly helping you understand, where do I want to be in the market. So we see here we have Acadia Pharmaceuticals, and I've brought up the biotechnology ETF here as well. And what I want to point out is, a lot of traders are using these tools that, again, get traders tripped up. They react to where the market's already been. They're constantly, getting false crossovers at time, and really making it difficult for traders to get a handle on what is the direction of the market? Where should I be holding my position in the market? And so we see here we have the biotechnology ETF, and all of these crossovers really came through at the same time. And I'm actually going to demonstrate a feature where we actually have a scanning feature where, all this stuff is really presented to you really in a couple minutes each evening. I mean, all of these crossovers, you don't need to be looking at chart after chart after chart and picking out a crossover. It's really going to present to you, hey, where are the fresh opportunities happening right now? And again, remember, you've got a tool that's leading the market, not lagging behind it. So if we go ahead and look here, and this is what's so important here in the biotechnology ETF, is look at the blue line and the black line here. And this is where traders have a lot of tools that really get them tripped up here, where we have this decline in the market. You see the market hitting these low values, a lot of people getting very skittish over that time period, but look at your overall direction. Look at your blue line, remaining above the black line, and actually getting separation, more separation between these values while the market is moving lower. So, we have that indication that we're going to get that short-term weakness, saying get a better price, but you still want to be long the biotechnology index here. And we see what happens when the software lines up, where we get our short-term forecast, neural index up at a 1, we have that crossover, getting that separation, and we get that really nice rally higher. And so this is what can help us, not only have the confidence to hold a position, but identify these individual markets like we have here in things like Acadia, saying that, hey, there's some short-term weakness here, but I want to be paying attention to the pharmaceutical companies here. This is where I really want to go ahead and be long with that clear forecast, saying, look, go ahead and get long the market. And again, you see crossover to the upside, neural index up at a 1, and again, that's where we want to go ahead and understand that, not only is this ETF keeping us in the market, But that overall the predicted moving average is essentially going to help us identify where we want to be long or short, and it's really the same thing here to the downside. You see we get this clear crossover to the downside, and this is what happened in Infinity. We really needed that clear confirmation around the 9th, June 9th, saying, look, go ahead and look for shorts in these markets, and that has certainly been the appropriate play. Now, over the past couple weeks, we've actually seen the financials taking quite a dip here. We see the financial spider here. We have a crossover blue line moving below the black line, forecasting that direction lower. A little bit of short-term strength coming in here, but direction clearly to the downside, and getting a pretty nice decline in Wells Fargo stock over this time period as well. So if you trade weekly options, things like that, this is definitely a really great help, to help you understand, hey, where should I be going ahead, getting into the market, get that move that you're looking for, and then go ahead and take profit. Again, over this time period, where might you want to be long the market? Look at these utility spider. Cross over the upside we got several weeks ago. Very nice signal from the neural index. You see that 48-hour forecast continually forecasting the market higher, and we had some nice moves out of utilities. See PCG here, very nice move, but you see we're actually getting a crossover to the downside here in the utility spider. Very, very, very narrow here. Got 1 penny moving below, but certainly a good time to say, hey, look to take some short-term profit. We even have our neural index down at a 0 here, saying maybe try to improve prices, take some of your position off, tighten up your stops. But again, trading in line with the software is really what it's all about here, guys. Now, this week has been interesting because you have a lot of people really honestly just waiting on Thursday, and we're probably going to see a lot of volatility. But this is why it's so important to utilize these tools to identify these crossovers early, so that when that volatility picks up, you're already in. You're already a part of these things. So a couple weeks ago, we ran our scan. We really did a webinar just like this, and this is what was coming in as far as Whole Foods, nice clear crossover to the downside, and neural index very, very weak over this time period, saying not the time at all to be long Whole Foods. About 11% move to the downside in just the last 6 trading days here, guys. So this is what can really help traders get a handle on their trading decisions in the market. Again, I talked to so many different traders. They're using, regular moving averages, using things like, stochastics, or using Fibonacci. And the problem is these tools have no way of accounting for how the markets actually function. I mean, the reality is the dollar index affects every single stock trade you're going to have. The crude oil contracts, if you're trying to trade energy companies, are going to have a huge effect. Things like the Japanese yen, the Nikkei, the DAX, all these big major markets, but then a lot of these other subtle relationships like the ETFs, competing company stocks, other stocks that trade in tandem are really going to give you a really good handle on how you want to be trading these markets and how you want to be positioning, regardless of your trading style, whether that's short-term, a day trader, whether you're trading options, or whether you're just going ahead and developing a strategy, which is really what I've done, off of what is the forecast telling me to do. If I need to stay long, stay long. If I need to go ahead and be short in this market or long in this market, making those decisions, but completely in line with what this, what the forecast is giving us here. So what I want to do here is before we go ahead and hop out of this is, like I mentioned, there's a really wonderful scanning feature in the software. So there's really no need to, scan through chart after chart looking for the crossovers and things like that. Let me go ahead and I'll open up actually our services sector because that actually has the most opportunities, and I can demonstrate how quickly this can be done here. So we'll go ahead and save this portfolio. We see it closing up, and what it's going to do is actually open up all these service sector stocks and help you identify, okay, how should I go ahead and look, what should I be looking towards each and every day? Now, what's really important is, again, looking at those things like these confirming markets, and we do have a little trouble with the S&P 500 here. I can actually bring this up here. But let's see, we're loading up. So you see what's happened here. So we got this nice rally in the S&P 500, but quite a little bit of conflict right now. You see you have a crossover to the downside, direction is still down, but the neural index is up at a 1. So we're not going to get a lot of opportunities for fresh crossovers and fresh opportunities, but what I do want to show you is how quickly this scanning feature works. And so if you trade options, you don't have to just have the services sector in here. You could just have highly liquid options markets, build a portfolio off of that. If you focus on a certain sector, or if you focus on the Forex market or commodities, you can include whatever you want in the scan and literally scan through hundreds of these markets in a very, very short period of time here. But we'll go ahead. You see I have my medium-term cross days ago, so we can see how many days ago have a crossover occurred. Well, traditionally we'd want to set this to a value of 1, see where those fresh opportunities are in the market. We can also say medium-term cross direction. Are we looking for long positions or are we looking for short positions? So you see here if we set this to up, we've narrowed about 170 markets, narrowed that down to about 22, move that down, we've got one BB right here, kind of a little bit of conflict there with the neural index as well, but that's our one that just had a fresh crossover last night, and then we can also make sure our neural index, our short-term forecast, that strength or weakness over the next couple of days, want to make sure that that's in alignment as well. So if we're looking at long positions, we could set that up to a 1. And so we can identify possible opportunities where we want to go ahead and take positions on the market. But what we can do here, guys, is very quickly save this scan exactly like we have it here. So if I want to go ahead and change this to services long, since I've set it up for essentially a long position scan, I can go ahead, click OK. Click Save. Let's see here. Control S or just click Save there. And now, as soon as we open up this portfolio, as soon as we come back to this, all of these opportunities are sitting here waiting for. All these fresh crossovers from the software are going to be ready for us. So literally, I mean, I trade all markets. I trade commodities, Forex, the stocks, and I do that because, again, you can apply this technology, this approach, this consistency to any market. But it takes about 10 minutes to run through the Forex and the futures markets. Literally about 10 minutes. You see exactly what you want to see for the next couple days. And then I get up early for the stocks. I go ahead and make some coffee. I walk my dog. Spend about 30, 35 minutes just sitting in front of my charts, going through literally hundreds and hundreds of markets and finding exactly where I want to go be positioned in that market. And you can really build a nice portfolio, understanding, hey, where do I want to be long the market? Where do I want to be short? But knowing that you've got not only those intermarket relationships in your favor, but that you're trading in a very consistent and focused way to help you make good trading decisions off of probabilities, not what you heard on the TV or what some guy recommended. Because the reality is that you as a trader need to make these trading decisions. Don't rely on anyone else. Get the right tools to be a better trader, and that will go quite a long way to helping you see much better trading results with your P&Ls.